In this video, we are going to summarize financial news of some companies in paints and coatings industry for second quarter of 2020. So, let's start with Axalta. Axalta Coating Systems provided an update regarding the ongoing impact of the coronavirus COVID-19 pandemic on its business, employees, customers, and shareholders, and related mitigation actions taken and planned. The company also announced the initiation of a global restructuring of its business to better position Axalta for sustained growth. Second quarter 2020 highlights. Notable monthly sequential net sales recovery, June 2020 net sales 82% higher than April 2020. $1.5 billion in total liquidity available at June 30, 2020. Net sales of $652.7 million, decreased 43.6% year-over-year, decreased 39.7% ex-FX and M&A impacts. June 2020 net sales recovered to down -24% ex-FX versus June 2019. Loss from operations of $64.5 million, adjusted EBIT of $11.6 million. Q2 2020 includes $45.0 million in COVID-19 related accounting charges. Diluted EPS of 35 cents versus 42 cents in Q2 2019, adjusted diluted EPS of 15 cents versus 52 cents in Q2 2019. Global restructuring announced, -$50 million in annual run rate structural cost savings. Let's continue with Wacker. Wacker's sales and earnings in Q2 2020 affected by lower volumes amid coronavirus pandemic. Second quarter 2020 highlights. Wacker's sales for Q2 2020 total €1.07 billion, down 15% from last year. At €105 million, EBITDA decreases 50% year-over-year amid lower volumes due to the pandemic and lower prices for solar-grade polysilicon and standard silicones. Net income for Q2 2020 comes in at €5 million. Quarterly net cash flow reaches triple digits at €137 million. Due to pandemic-related risks, specific guidance for full year 2020 is still not possible. Covestro was significantly impacted by the coronavirus pandemic as expected. Second quarter 2020 highlights. Core volumes decreased by 22.7%. Group sales total approximately €2.2 billion, -32.9%. EBITDA of €125 million. Net income of -€52 million. Free operating cash flow rises to €24 million. Consistent crisis management and measures to secure liquidity. Orientation towards a circular economy accelerated. Arkema confirms its resilience with a robust financial performance and high cash flow generation in the context of a global economy strongly impacted by the effects of the COVID-19 pandemic. Second quarter 2020 highlights. €1.9 billion in sales, down 15.6% year-on-year, -10.7% in H1 20. Significant slowdown in the construction, transportation and industrial sectors, overshadowing good demand in the nutrition, packaging and hygiene markets, sequential improvement in June, supported by the progress in the construction market in Europe and the US, and solid sales in China. €286 million in EBITDA, €407 million in Q2 19, and EBITDA margin of 15.0%, a resilient performance in view of the context. Solid performance of advanced materials, with an EBITDA margin of 20%. Sharp rebound for Bostik in June, benefits of rapidly implemented interim fixed cost reduction initiatives. Adjusted net income of €90 million, €192 million in Q2 19, representing €1.18 per share. Excellent free cash flow at €288 million, €90 million in Q2 19, reflecting strict management of working capital and capital expenditure. Net debt down sharply relative to end March 2020 at €2,134 million, of which €1 billion in hybrid bonds, including the €168 million dividend payment and €246 million in net proceeds from the divestment of the functional polyolefins business. Huntsman to target total annualized cost savings and synergies of $100 million by end of 2021. Second quarter 2020 highlights. Second quarter 2020 net loss of $59 million compared to net income of $118 million in the prior year period. Second quarter 2020 loss per share of 28 cents compared to diluted earnings per share of 47 cents in the prior year period. Second quarter 2020 adjusted net loss of $30 million compared to adjusted net income of $108 million in the prior year period. Second quarter 2020 adjusted loss per share of 14 cents compared to diluted earnings per share of 47 cents in the prior year period. Second quarter 2020 adjusted EBITDA of $54 million compared to $245 million in the prior year period. Second quarter 2020 adjusted EBITDA of $54 million compared to $245 million in the prior year period. Second quarter 2020 net cash provided by operating activities was $85 million. Free cash flow from continuing operations was $30 million for the second quarter 2020, and adjusted free cash flow from continuing operations was $38 million. Balance sheet remains strong with a net leverage of 1.5x, and total liquidity is approximately $2.6 billion. The CVC Thermoset Specialties acquisition closed on May 18, 2020. The integration remains on track, and the company expects to achieve the targeted annualized synergies of approximately $15 million by the end of 2021. Clariant to improve profitability in the first half of 2020 despite a difficult economic environment. Second quarter 2020 highlights. Sales from continuing operations decreased by 5% in local currency to 1.945 billion Swiss franc. EBITDA margin improved to 15.0% compared to an operational performance of 14.9% in the first half of 2019. Net result for the total group improved to 90 million Swiss franc. Operating cash flow at 89 million Swiss franc. Outlook. 2020 results will be impacted by the COVID-19 pandemic, focus will therefore be on mitigation and cash generation. The Chemours company to report strong improvement in free cash flow despite weak global demand, COVID-19 response plan remains on track. Second quarter 2020 highlights. Net sales of $1.1 billion. Net income of $24 million, with EPS of 15 cents. Adjusted net income of $30 million, with adjusted EPS of 18 cents. Adjusted EBITDA of $166 million. Free cash flow of $50 million, a $167 million improvement from prior year. On July 29, the company's board of directors approved a Q3 dividend of 25 cents per share, consistent with the prior quarter. The Sherwin-Williams second quarter 2020 financial results. Second quarter 2020 highlights. Consolidated net sales decreased 5.6% in the quarter to $4.60 billion. Diluted net income per share increased to $6.48 per share in the quarter, compared to $5.03 per share in the second quarter 2019. Adjusted earnings before interest, taxes, depreciation and amortization increased 6.2% in the quarter to $979.0 million, or 21.3% of sales. Net operating cash increased 42% year-to-date to $1.07 billion, or 12.3% of sales, increasing FY20 diluted net income per share guidance to a range of $19.21 to $20.71 per share, including acquisition-related amortization expense of $2.54 per share. Prior FY20 guidance was $16.46 to $18.46 per share, including acquisition-related amortization expense of $2.54 per share. Against a backdrop of the worldwide recession triggered by the corona pandemic, Evonik is getting through the crisis well. Outlook for 2020 confirmed. Adjusted EBITDA between €1.7 billion and €2.1 billion. Q2 sales decline 14% on weaker demand, adjusted EBITDA falls 19%. Robust EBITDA margin of 20% in growth segments Nutrition and Care and Resource Efficiency. To learn more, visit www.paintsandcoatingsexpert.com.